Hey everyone, I'm Cody Charnell. I'm a multifamily real estate broker here, and we're based in Long Beach. So if you've been watching the news recently, you've seen there's a ton of fires all over LA. It's pretty incredible what's going on. And I've been getting questions from clients, now that there's fires in our backyard here, some of our clients have even been impacted. Insurance has been a hot topic. So today I'm joined by Chris Icaza and Keith Brewer from B2 Insurance. They're based in Redondo Beach. They have a ton of clients who've been impacted by these fires. And I know you guys have been super busy lately dealing with this. So thank you so much for coming in. I'm sure you're going to have a lot of valuable information for everybody.
Thanks for having us.
Absolutely. Thank you.
Awesome. Can you tell us what's the workload been like?
It's another phone call or 10 every morning as far as not only people that have been impacted directly by the fires in the Palisades and Altadena and other areas, but the clients in the surrounding areas wondering, hey, I'm buying a home. Am I going to be affected by the moratorium? There's a moratorium in Los Angeles where a lot of carriers just aren't writing until the fires are completely out, which the weather's starting to turn now, and we're having a little help with that. But the embers are still out there. So there's still a moratorium.
Right. And even current clients calling, do I have proper coverage? So reviewing current policies, right? Coverage, extended replacement costs, all this stuff. Am I insured properly? So we're getting a ton of that as well. People trying to relocate to different locations for renters insurance policies, as well that they need. Some companies aren't doing that right now too. So it's all over the place. Text, emails, calls, whatever.
Got it. Okay. You touched on a lot of good stuff there. Let's start with just what advice are you guys giving people who have been directly impacted? Like if someone's lost a home or a business, like what are the first steps that they should take?
I would say, hopefully you had some inventory of your property, video or receipts. Go collect your receipts, go through your bank statements and get a nice detail. If you could put on a spreadsheet of all your valuables, that would probably be the first thing.
And then even you can video, surrounding, a video of your property, and you can send that via email, right? If you lose your phone or whatever, email that to yourself. You have that information, which is great. Photos, all that stuff, that's huge. And that's going to help the claims adjuster in the event of a total loss as well, to speed up that process.
And then also, so you're not in the dark, review your policy for what you're covered. If you're a homeowner or multifamily unit owner, for that dwelling coverage amount, maybe you're only insured for $250 a square foot when you should be insured for $400 a square foot. A lot of these carriers do offer extended replacement costs of 25% or an extra 50% on top of that. But the carriers want you to be insured to value. So, some of these policies are 20 years old. So the clients and the agents should be talking with each other to make sure you're insured for the right amount land value is not included. We're just talking about rebuilding the structure. If there's a fire or a loss, a water loss, what is that number to rebuild? And in insurance, we have replacement cost estimators, which are fine and dandy, but those numbers are coming out super low. They're not even close.
Yeah, they're not always accurate at all. Not close.
So it's up to us. We can give you a number, but it's up to you as a client. If you have a property in Manhattan Beach, and even an apartment building, you got to be insured for $400 to $500 a square foot. A house, you're looking at $800 to $900 a square foot, or even more, $1,200 a square foot.
Wow.
So people should be reviewing their policies. That's what they're there for. That's why the client gets a declaration page that lists your coverage. It's not just like put it in the round bin and throw it away. Mm-hmm. You need to review your policy as a client as well.
I see. So the replacement cost estimators, they come into play when you're getting the policy initially, right? So, okay.
Correct.
So people just need to be really aware of what that number, that rebuild cost number is when they're either renewing or starting a new policy.
Yes, and it's really basic. It's square footage, number of bathrooms, type of flooring, type of roof that you have. You have an attached garage, detached garage, etc. So it's pretty basic, and it's always typically low. We always will offer coverage a bit higher than what it comes out to be, but it's always just reviewing that with the client, giving them more coverage if needed, obviously, and making sure that they're insured properly.
The more coverage comes with a higher price.
And clients
Right.
don't like to pay that as well. So you can offer them, here's a Ferrari and here is a, Honda Civic. They'll try to find something, in the medium, and they don't want this and they don't want that. And some people just want the cheapest thing possible. But as long as you educate them and you send them multiple options, then it's their decision at the end of the day to make,
Got it. Okay. I wanted to go back to what you guys were saying about taking inventory. So when you're taking inventory of a property that's, let's say you're getting evacuated, do you also want to take inventory of improvements that you've made to the actual structure? So it's not just personal belongings.
Absolutely. And invoices from a contractor, if you have that, on file, typically the contractor can still give you that, afterwards, but still anything that you can provide to show that you made improvements or whatever it may be, added on square footage or whatever. And that's something that people should notify us as well to increase coverage. But a lot of times people don't.
Yeah. I feel like insurance, you get it when you close on a building and then you forget about it.
Yeah. You pay it every year and you set it and you forget it.
Right. Okay. So I think big losses like this, big natural disasters really get people thinking about it. So if you haven't looked at your insurance policy in a while, make sure to reach out to your insurance broker. If you don't have an insurance broker, these are your guys right here. So make sure you're paying attention to what's going on there, because stuff like this can happen.
Yeah, and the insurance companies do have hearts right now. Like one of Chris's clients was one of the properties that got burned in the Pacific Palisades, and they got a check within 7 days.
Wow.
Yeah, 160K check. They just got it yesterday. I spoke to the client, and they're just trying to find a new property right now to live in. But that time frame to get that money was pretty good in my opinion. It's not a month, 2 months, whatever. It was a couple days, which is good, and the client seemed happy, and everything's moving along smoothly. Which is what you want to hear.
Got it. One question that I got from a client recently was they heard something in the news where a lot of people up in the Palisades didn't have a fire insurance policy. And my clients were like, wait a minute, we never got a fire insurance policy. And I think for a lot of people, it's wrapped in with the home insurance, right?
That is correct. Home insurance is fire insurance. It's correct.
Got it. Okay. And if you live in an area that's like high fire risk, like the Palisades, do some carriers exclude fire, and then are people forced to go with the California Fair Plan?
Some people will be forced to go with the California Fair Plan, but that's basic fire insurance. Also covers for vandalism as well. But the limitations on it is total insurable value is $3 million. And so you get another supplemental policy. It's called a difference in conditions policy, which covers you for water damage and liability, medical payments, etc. So both of those policies combined will equal to one homeowner's insurance policy. But all those properties up there, 5 million, 6 million, 10 million, 15 million, you're underinsured if you're going with the California Fair Plan. It's not good coverage, but some people don't want to pay for a real policy up there. I had a client who has a 5,000 square foot property, high-end materials, and getting non-renewed by a specific company. We got them quotes, and they were paying for a policy that was probably $12,000 a year for $5 million worth of coverage, which is nothing if you look at it, just for replacement cost of the property. And we got them quotes, with another company, and it's $45K.
Wow.
Much more expensive, right? But in a brush area, which is near that location, and that client declined to go with that policy because it's so expensive. So they took the risk of going with the California Fair Plan, but their property burns down. They're paying, $2,000, 3-4 million out of pocket for their personal property coverage along with the building itself, just because they didn't want to pay for that. And it's so expensive too. But I mean, realistically, none of those standard companies want to take on that risk.
Wow. Okay. And can you explain a little bit about what the California Fair Plan is, just so people know what it is if they're not familiar?
Yeah, so it's a government-run agency that if you can't get insurance on the open market, typically you go to the California Fair Plan. If you're in a brush area, Malibu, some other Agora Hills, places in Laguna.
Big Bear, Mammoth. I mean, any high risk area.
Yeah.
Got it.
So you go there and so now they're inundated and they don't have the support staff to typically service all these policies that they've had. And a lot of this is due to COVID. Insurance carriers were put on hold for as far as being able to raise their rates during COVID. Everyone's at home. Everyone's working at home. But when people went back to work, and so it's all a trickle down effect. Your home, your auto insurance, if there's a lot of losses on homes, the insurance carriers have to make it back with auto insurance or somewhere else. If you're not able to raise rates either on the home or the auto insurance, then you're going to lose money. And insurance companies typically before COVID made money.
Right.
And now, I mean, a lot of people say, oh, poor me, the insurance companies always make money. They don't always make money. They've been losing money since COVID. And now you put on natural disasters. We've had the fire back in 2022 was a big fire as well in Los Angeles area, Agora Hills, that area that, a few carriers were heavily insured a few carriers insured all the homes in those areas. And now so we were going through a term last year where we're getting a lot of non-renewals from carriers. And because they were losing money and they didn't want to be in the high fire areas, Pacific Palisades and Malibu and those types of areas. Well, so they put out those non-renewals, and then now we just had this fire. Well, they were only able to get off on 25% of those properties. So they're still on. So now they're stuck on those properties that we just lost the Palisades. So they were on 50% of those properties. And that loss ratio is going to be massive. And as far as the future, rates are never going to go down. Now, we've already seen 25% rate increases, 50% rate increases. And after this, they're only going to go higher. And it's not only California, it's Florida, Texas that's had, crazy rains and hurricanes. But everyone across the country is going to be affected by California and Florida and rates going up, because if State Farm says, hey, we need to raise rates 50%, or else we're not going to come back to California to even insure, and all the other carriers have to raise rates as well. And they all follow suit to be profitable. They have to be profitable, or else they can't just do business in California.
Yeah.
So we're seeing an interesting thing right now, especially with these last fires. And my heart goes out to everyone that had any kind of loss, property loss. It's just a tough situation right now, and we'll see what happens in the future. But guaranteed rates are not going back down as they were in the past.
Gotcha. Yeah. On the topic of rates going up, someone else I was talking to mentioned the reinsurance market, and that's one way that these big losses get spread out across the country. Can you talk a little bit about just what reinsurance is for people who don't know?
Yeah, so any carrier in California or any carrier in the world, there's always reinsurance, and for you to even be able to operate, you have to have a reinsurance carrier out there. Now with these losses, I would assume that the reinsurance carriers are tightening up as well. So not only do you have the regular carriers that are having to tighten up their guidelines, and that's another thing, that's another topic, like all these carriers now are tightening their guidelines. They don't want to take anything built prior to 1970. and they want all updates. So we're going to see, I mean, I'm just going off on a tangent right now, but there's four major things that have to be updated that carriers want, or even the California Fair Plan. Your roof has to be updated in the last 30 years. Plumbing has to be updated. Electrical panels is the biggest thing right now. If you have Federal Pacific Stab Lock, Zinsco, or Challenger panels, they have to be replaced. And people are used to just like, as multifamily apartment owners,
Oh yeah.
like used to just the norm. I don't want to update these things. Well, now it's been 30 years. You have to update these things or you can't get insurance. And that's just going to be how it is. But yes, so going back to reinsurance, yes, every insurance company, State Farm, Mercury, Travelers, they're all have a reinsurance carrier for big losses that get spread around. And you can't do business unless you have a reinsurer that can help you cover those massive losses.
Got it. So the reinsurers are basically buying some of the risk on those policies. And when there is a big loss, like they're getting hit too.
Yes.
Absolutely.
Gotcha. Yeah. And just to echo what you were saying, insurance has been so tough for multifamily recently. It seems like every deal we're having to negotiate main panel replacements, sub panel replacements. I have one deal right now where the entire building is knob and tube wiring. And so we're trying to work with the insurance company to get more time after closing to replace it basically. But I mean, that's $160,000 upgrade between wiring all the sub panels, replacing the main panels. And there's tenants in this building. They want it done in 60 days. So it's like, it's pretty brutal.
Tough.
Yeah. And just to give listeners some perspective on cost for insurance, a couple of years ago, I was doing like $600 per unit per year as just an estimate for what an insurance policy might cost on a multifamily building. Now I'm doing $1,000, $1,200. So it has basically doubled. And sometimes it's even more than those estimates, just depending on, how old the building is. And
yeah, depending on the age of the building and the updates, location, all that stuff, X factors into it. It's a tough market.
But we're for multifamily, we're in a new world now. If you are not updating your building, you're not willing to update, you're not going to have insurance. Has to be updated.
mm-hmm.
Electrical plumbing, galvanized plumbing, very few carriers are taking galvanized plumbing. You have to have copper or a copper equivalent these days. Electrical panels have to be, I mean, that's not cheap, right?
Mm-hmm.
But they've gone 30 years without updating. They should have put some money away, and now they have to update. That's how it's going to have to be.
Yeah, and the carriers want you to see, pride of ownership in the property. They don't want to insure a property that's going to fall down or have potential claims. And there's a lot of these non-renewals going out for these properties because they're not in good condition, right? And something is going to happen, and there aren't any updates to the property. So there's reasoning behind why they're getting non-renewed as well. And that clients will get ample amount of time to find coverage, elsewhere. That makes it for high value properties or even older buildings around here, whatever it may be. So clients are getting a good, 5-6 months, or so to find coverage elsewhere or to make those upgrades within that time as well.
Also, all the carriers are now using AI technology and pulling permits. They're using Google images. And so if Google went and took an image of your roof 2 years ago and there's a big water spot on your roof, you may have updated it, but if the Google image or the report that the insurance, you'll automatically get a block bind, which is a big red flag that don't go further unless you could give us a receipt within the last 2 years that you've updated your roof. And so this is happening now that all the carriers are using AI and Google to pull permits and images. And so it just goes in their system, and all we do is type in the address and the location and the name, and then we go like a few more steps. All of a sudden, it's either a green light or a red light. And if you haven't done these updates, you're getting a red light, and we can't move forward.
Oh man, busted by AI.
Yeah.
Okay. Well, yeah, insurance is tough. Luckily, you guys have been able to help us navigate it with, I think you've done dozens of policies for our clients
Absolutely.
now. So So if you are struggling to get insurance, definitely again reach out to these guys. One other thing I wanted to ask, actually, it was a client who asked me this. For people who have been displaced by the fires, how does the temporary housing work? Like, is there a standard length of time that someone is entitled to get compensation from an insurance company to go rent a place? And what other parameters get worked in there? Like, does it have to be a certain distance from the property that they lost? Similar bedroom, bathroom count? Like, what goes into that?
It's usually like for like. So if it's a apartment building apartment building owners get loss of use. So their tenants should have, every tenant, multifamily, the tenant should have their own renter's policy. And every property owner, landlord, should make sure their tenants have their own policy for loss of use to go move somewhere else. But yes, so I mean, but if you're a homeowner, it's like for like. So if you have a 5,000 square foot house, you're going to go be able to move into a 5,000 square foot house. I had a client that was 4 blocks up from the ocean, and the only thing in their area, because they had to find something in their area, was right on the Strand. So the insurance company paid $20,000 a month to let them live on the Strand in a similar square footage house.
Wow.
So yeah.
And there's usually a limitation for most companies, and it's 50%, of whatever that coverage A, which is the dwelling limit, right? 50%, sometimes 30%, depends on the carrier and the coverage. So you have $1 million replacement cost to rebuild a property at $1 million. You're gonna get $500K, for that year to live at a different location, and they can pay for that basically while your property's being rebuilt or repaired or whatever it is. And then if it extends, then they'll need to extend it, and you'll get, additional money that following year, whatever, to live at that location while your property's being rebuilt or repaired as
But
well.
usually the business income is about 12 months. So everyone should review their policies, especially on multi-family unit buildings. You could extend that limit of loss of use to 360 days. So people should be reviewing their policies to see if they only have coverage for 12 months. I mean, if there's a fire, Palisades, I mean, there's chemicals they have to clean. No one can even get up there. No contractors can get up. This is going to be 4 years
5 years, yeah, for the
to
larger
rebuild the
properties,
Palisades. So
for
these
sure.
people that were living up there are going to have to rent. And a lot of them are coming to the South Bay. I mean, maybe you've seen some people down in Long Beach that are coming, trying to get rentals.
Yeah. Most of the properties that we deal with are not like for a Palisades house. So I haven't run into anybody yet, but I'm sure some other brokers in Long Beach who deal with like luxury houses and single family homes are dealing with that right now.
Yeah, I mean, I had a client purchase a property, rush, closed it, got a policy, Palisades, 5 days before the fire, complete loss.
Oh my gosh.
Yeah, it was crazy.
Wow. And so for someone like that, are they still on the hook for their monthly mortgage payment, taxes, and
Absolutely.
insurance?
Yeah,
Okay.
you made an agreement with the bank. You owe that loan, you're paying that. The insurance company's only responsible to pay for you to live at a different location. So you're going to be paying that mortgage for sure. There's no
Gotcha.
way around that. Yeah.
Wow, that's rough. And you mentioned one of your clients got paid out in 7 days. I'm assuming that was only a portion of what their total payout is going to be.
So for him, that was they got a third of their personal property coverage, which is TVs, couches, chairs, furniture, clothing. And that was 160K. So they got a third of that up front, right? And then whatever else they need, as far as when they find a property that they like and they're going to rent, then they can issue that information to the claims adjuster. They can get reimbursed for, whatever that monthly payment is to live at that location as well.
Gotcha. Okay. And then I guess they'll work through the process with their adjuster, and whatever it's determined their property was worth when it was burned down, the additional payments come later. And do you know roughly how long it might take to get those?
I mean, they got to contractors get all that stuff out there, it's going to be a long process, I would imagine. I mean, I think first and foremost is what they did for them, personal property coverage, because all their stuff was in the property that burned down. Next will come the loss of use coverage, for the rental, and then construction cost, all that stuff. I mean, I don't even know how long that's going to take, obviously.
Got it. So they're actually having to get like plans, building bids, and everything before they can get that payout.
Absolutely.
Okay. So if somebody didn't want to rebuild and they just wanted to sell a lot and walk away, didn't want to be in a fire zone anymore, is that an option for people?
So I was speaking to a lawyer that specifically deals with insurance claims, and we were kind of going back and forth, but insurance is to rebuild your structure. So you can't rebuild in the Palisades. Can you rebuild in another area? Yes, but the insurance money is specifically supposed to be used to rebuild, and you're not supposed to be able to just get paid out and do what you want with that money. It's supposed to be rebuild a structure. And if you can't, because it's the Pacific Palisades, and this is a natural disaster, so the insurance carriers know this, and so the same limitations you would have if there was no natural disaster, if it was just your home that caught on fire, don't quite apply now. There's different rules, and insurance carriers are being more lenient because it was a natural disaster. So, but yeah, I mean, really, it is to replace your property. You're supposed to use the money to rebuild, and that's that's what the money is supposed to be for.
Got it. Okay. So going to be probably a few years before people see like the full extent of their payouts. Like once all the permits are pulled and plans and everything else is done.
It's a long process, especially within that area, obviously.
And the Palisades. So there's what is it on the coast, the ocean? I guess. Anyways, these guys are lightning. Like the people that issue permits, the cities for the Palisades, they're all foregoing OSHA and all these other regulations.
Oh, right. The Coastal Commission.
Coastal Commission.
Yeah.
There we go.
Yeah. Yeah, I heard, I guess maybe it was the governor who put a stop on that. So you can basically bypass Coastal Commission to speed things up. So some good news. And one other question I had was about adjusters. So I heard somebody talking about hiring a private insurance adjuster. Why would somebody do that? And is there any benefit to doing that?
Yeah, we were going to have this conversation earlier, a private or public adjuster. And I would go against that because it could delay the claim. You should want to work with the adjuster from the carrier. And yeah, the insurance companies are trying to minimize their losses, but you want the most for your property that you lost as well. Instead of going with a public adjuster or private adjuster, either one, I would say go with a lawyer that specializes in property claims to help you navigate your coverage and your policy and help you with the claims adjuster. But I think in this circumstance, I think the carriers are going to want to help any client out in a natural disaster like this as much as they can. And one carrier is Mercury. They're born and raised in California. They want to stay in California. All these other carriers left California. Mercury's still here. That's one of our bigger writers that we write with. And they're offering renters policies to people that had lost their homes and they want to help out. And so, where other people are saying, well, you just had a loss, you can't get a renter's policy. Mercury's saying yes. So yeah, natural disaster like this is a little different. And, but I would probably, if you were a homeowner or a multi-unit tenant owner, I would stay away from the public adjusters. They're going to probably delay your claim they're going to fight for the top dollar. Yeah, that's nice, but I think you could do better off if you just negotiated with your adjuster from the insurance carrier, and you could be better off, way better off than hiring one of these people.
Gotcha. Okay, so there could be some benefit by going with a lawyer who specializes in insurance claims, but the cost is higher. The time to complete, those negotiations is stretched out significantly, it sounds like. So I guess for people listening who might be considering that, just those are the things that they should be weighing, right?
Yes, definitely.
Gotcha. Okay. And, this has been one of several big natural disasters in the US over the last few years. If you guys were to look back at Hurricane Helene, which was last year, even bigger losses for insurance carriers, did you see or what did you see as a result of something like that? And what can we expect, what can we expect to see in California with some of these insurance carriers? Like, I know a lot of people were forced to go with excess and surplus lines. Some of those, actually, I think maybe all of those carriers are not admitted, right? So maybe, are we going to see like bankruptcies of some insurance companies? I think we'll probably see ballooning costs to rebuild. Do you think we'll see government intervention? Like, what are the things you're looking out for?
Yeah, so I mean the premiums, unfortunately, if you're in Malibu or Laguna and specifically Palisades, premiums are going to be triple. I mean, when you were paying $10,000-$12,000 with a certain carrier, now you're looking at $60,000 to $100,000 in premium. Can some of these people afford it? Probably with the bigger homes, but the people with the smaller homes may not be able to afford that. And we'll have to see if the government's going to come in and say, hey, we're going to fund the insurance companies so that they don't have to raise their rates. But it's a business. Insurance companies are a business. They have to be profitable. And if the only way to be profitable is to raise their rates, then that's going to be it. But going back to surplus lines, you mentioned that earlier. And so there's two types of carriers. There's admitted carriers and non-admitted carriers. And admitted carriers are backed by the state of California. That's your State Farms, Travelers, Mercury, Allstate. So if they go insolvent and they can't pay your claim, then the state will pick that up. But that being said, we as brokers will know way before if that's going to happen. If a carrier is going for, so it's highly scrutinized to be an A-rated carrier with AM Best. Your financials have to be very good, like billions of dollars in financials. But if you so happen to be, you lost so much in claims that you're now a B-rated carrier, we don't work with B-rated carriers. So we automatically switch you to an A-rated carrier if you're a B-rated carrier. But that might have to be with a surplus lines carrier, not an admitted carrier. But it's not that bad of a thing to go with surplus lines. Lloyd's of London, the biggest carrier in the world, Scottsdale, Lexington. These are all non-admitted carriers. But hey, their financial rating, they have so much money behind them. They're reinsured that they have an A rating. That's really, as a client, all you really should care about, non-admitted or admitted, is are they A rated?
Right.
I see. Okay.
And Scottsdale is backed by Nationwide, another company that we write a lot of policies with, Westchester Surplus. They're backed by Chubb, which is one of the top premier companies, So as he said, if a company drops to B plus rating, we don't work with them. Mm-hmm. We'll switch our client to a different carrier. So you're always going to get an A rated company, working with us.
Got it. Okay, cool. Something else that came up with a couple of escrows that we have going right now is there's a moratorium on writing new policies. And I think it's just within a certain radius of active fires, right?
Depending on the carrier, yeah. Some carriers say 20-mile radius, some are saying 30-mile radius, depending on the carrier. It's really difficult to find any coverage right now for anything within that radius, for any clients right now. It's nearly impossible. I found a homeowner's deal, I think, yesterday for a client, brand new build 2018. I got one company with them, and about 10 other companies have a moratorium from writing any new policies. And it's not directly near brush. It's probably about 20 miles from, the fires. One company was basically taking that risk as of right now. So
Wow.
it's tough.
It's tough. And this moratorium, they only last, well, I mean, this has been longer, but I would suspect that this will be maybe 2 weeks max, and we could start writing again.
Yeah,
Okay.
I reached out to someone this morning, and they said maybe the end of next week for a couple companies. And then one company was saying not until the fires are 100% contained. So it just depends. And it's going to fluctuate, obviously, with every single company and the underwriting team and how they're looking at their current losses and everything like that. So we'll see.
Yeah. And is that moratorium just for new policies, or if somebody has a renewal coming up, do they need to worry that they're going to get dropped?
They're going to be able to renew the policy. If you have a current policy in place, they're going to renew it. They have to, by law, do that. And, it's just a new business deal. If it's a new property purchase, or someone's getting dropped maybe by a different carrier, trying to find new coverage, they basically just have that hold on writing new policies right now.
But some carriers had issued non-renewals a year ago, and those non-renewals are not valid only in the fire areas of Palisades, Altadena. If you got a non-renewal and you're in Manhattan Beach or you're in Long Beach, that non-renewal still stands, and that policy. So you can't bank on that. You have to find another policy if you did receive a non-renewal outside of fire area.
Okay, so just fire areas.
Yeah.
Gotcha. All right, cool. Did you guys have any closing thoughts, things that you just want to throw out there for people listening who, might be worried about insurance, might be in a fire area, might have been impacted by fires?
I do. I mean, one of the biggest problems finding coverage for Chris and I at B2 Insurance are updates. So if you're planning on selling your property or purchasing a property, the updates have to be made. The roof has to be updated in 30 years. The plumbing has to have been updated in the last 30 years. And if you have permits, even better. And the number one thing right now is electrical panels. Zinsco, Challenger, Fellow Pacific, Stablock, multifamily or single family dwellings, these electrical panels have to be updated. We've written numerous policies where the client said, yeah, it's been updated, and they haven't been updated. We do. So the inspection doesn't come first. The inspection comes after we write a policy. So all good and dandy, a client tells us, yeah, everything's been upgraded. And then the inspection comes and, oops, you have Federal Pacific stat block panels. Now we're canceling you. So that is the biggest thing right now. If you're a new buyer, to make sure that property's been updated, or if you're trying to sell your property, you might as well update everything and maybe put a higher fee on your sale to make sure that these things are updated. Carriers just aren't going to take properties anymore that haven't been updated. So that's my number one thing.
Absolutely.
Yep. Got it. Good to know. All right. Well, thank you guys again so much for coming in. I think this has been great information and at a great time to be delivering it. So if you got any value out of this podcast or video, be sure to like and subscribe. I'm Cody Charnell. I'm a multifamily real estate broker. If you're buying or selling real estate here in Long Beach or surrounding areas, I'd love to work with you. And then Chris and Keith, like I mentioned before, they're with B2 Insurance. They've done a ton of policies for our clients. They know their stuff. So be sure to reach out. And you guys, thank you so much.
Thank you for having us. I appreciate it.
Awesome.
Thanks so much.